Okay guys, so we're pretty much drawing to a close of our first week here in the new office. I'm actually in my gym stuff, I'm actually ready to head to the gym right now, but I'm the last one in and I've got a little bit of free time whilst I'm waiting on some work coming through. So I thought I would take this time to put together a little bit of a more casual style of video and just briefly talk to you about building a trading plan and the importance of building a trading plan. Now, I don't have a script for this, or I've not really even planned this, but what I do have is some notes that I gave out to our members on building a trading plan. Now, this is actually, these notes actually come with our course, so you're getting a little bit of an insight to that. Now, a trading plan can, the title trading plan can encompass a lot of things, but to me, a trading plan is, outlining what it is you'll be trading, why you're trading it, how you're trading it, when you're trading it. Now, the reason that this is important is because it allows you to systematically work through different time frames, different strategies, different currency pairs, different instruments, different times, and work out really what works for you. The thing about trading, especially, something that I find with trading is that it's very personal, right? You can have a totally, mechanical strategy, something that works really, really well for you, and it may not work for someone else, or vice versa. So really what I'm saying is trading and having success in trading is about finding what works for you. And building a good trading plan and working from that is a fantastic way to actually get on your trading journey, right? So the first step, we have two phases, right? There's the preparation phase and there's the execution phase. So preparation phase has, let's see how many steps I've put in here. Preparation phase has 4 steps, right? Step 1, choose your battleground. So when I say choose your battleground, that sounds a little bit mysterious, but really what I'm talking about is, are you going to be trading FX? Are you going to be trading indices, stocks, bonds, etc., etc.? Now, we have written in here, you may want to consider, do you have access to this market during its trading hours? So, for example, some indices, bonds, etc., may not trade 24 hours per day. In fact, their trading hours might fall in a time period where you're asleep, depending on where you live in the world. So that's something to consider when you're picking the market that you want to trade. The next thing to consider is, can you afford the necessary charting software for the thing that you want to trade? Now, for those who come from an FX background, that may sound a little bit odd to you, but there are things like the bond market, for example, where you are going to need to pay for software to get accurate and reliable charting and data. So that's something else to consider. What you want to trade, do you have access to it whilst you're awake? And can you afford it? Maybe if you're a beginner, you might want to just start with FX and use the free charting software available, such as TradingView and the charting software that your broker would give you, and you may want to work from that. Now, step 2 of the preparation phase is choose your weaponry. Again, a mysterious title, but really what we're talking about here is your broker, your charting software, your newsfeed, etc., right? So, broker, are you going to choose an STP broker? Are you going to choose an ECN? Or are you going to choose a market maker, for example? If you don't know what that is, that's something you've got to look into, right? If you are choosing a specific broker, are you going to use their charting software, or are you going to use something provided by TradingView, for example? I know many people, for example, who maybe their broker is Admiral and they maybe execute on MetaTrader, but they analyze on TradingView on an Oanda or an FXCM price feed. Whatever way you want to do it, these are the things that you need to work out. Now, news feeds. We have Forex Factory is an excellent and free news feed, but maybe if you're trading full time, you may want to consider something like Live Squawk, right? Or Squawk Box, which is a live news service that's constantly streaming. Maybe if you have the capital available, you may want to, subscribe to Bloomberg News, and you may just want to have that running throughout the day. Again, this is something you need to consider. Now, when it comes to a broker, here are some things I'd like you to consider. Not just spreads or costs, right? You need to think about everything. So the first thing I want you to think about is withdrawal times. You know, I've experienced brokers in the past who, when you place a deposit, it arrives in your account within minutes. But when you want to withdraw, it ends up taking days. Now, brokers may have different excuses for this or whatever, but I personally would rather a broker that says, hang on a minute, when I'm depositing, they want to see some documentation, they want to see proof of funds, etc. And then when I'm withdrawing, it's instant. Now, Admiral Markets is actually a company, or actually a broker that KB Trading is partnered with. I'm going to leave a link down below if you want to check them out. That link does directly support myself in this channel. If you don't want to use the link, don't use the link, right? But yeah, Admiral Markets, when I first deposited with them, I moved over from IC Markets. And with IC, deposits were straight away, you know, instantaneous. With Admiral, I got a phone call. Hey, can you provide us proof of where you got the funds from? Can you provide us this? Can you provide us that? And at first I was kind of like, man, this is a bit of hassle. You know, I'm not even depositing that much money. I think it was like 25K at the time. I thought, you know, why is it taking so long? It was only when I spoke to my account manager, he explained, you know, they're FCA approved. They have all these different regulations that they have to, you know, abide by. And therefore, when money comes in, they have to be so strict about, you know, taking money in. However, when it came to withdrawal times, typically with Admiral Markets, I get a withdrawal within an hour, which is fantastic because I do withdraw profit at the end of each week. So on a Friday, if I've had a good week, I can withdraw profit and I can go out and I can pretty much spend it straight away, right? Now, so withdrawal times. Customer service responsiveness is another one. Now, you don't want your platform to go down when you're in the middle of a trade and not be able to get out the trade. You try and phone someone, you can't get anyone on the phone. There have been times in the past where I've been with a broker, I'm not going to name them, but you know, some news has hit and my MetaTrader has just crashed. And I can see from a trading view chart that the trade's, you know, getting back to entry or it's spiking up into loss, and I'm getting onto MetaTrader and it won't open. Now, that is just the worst feeling. You know, you just feel sick when that happens. So I phoned up the broker and you get, you know, put onto some automated service, you know, press 1 if you'd like to speak to sales, press 2 if you'd like to speak to account, and you're just like freaking out. You eventually get someone on the phone and they're like, yeah, I'll need to pass you through to our, you know, our London wing or whatever, and it's just a nightmare. Ideally, you want a broker who, if something goes wrong, you're, you know, 10 seconds on a phone call away. Now, third thing I'd like you to consider when choosing a broker is obviously spreads. Spread is the difference between the bid and the ask, for anyone who doesn't know. The tighter your spreads, the more accurate you're going to get fills on pending orders, take profits, stop losses, etc. I've had brokers in the past where the spreads are so large that when you actually get stopped out, instead of losing, for example, £100, you actually lose 105 or 110. Now, obviously that doesn't sound like a huge difference, but getting slipped that little amount or losing a little bit more than you wanted to just because the spreads are there, that sucks. I've even had pending orders in overnight and I open in the morning, pending orders here, prices pushed up past it and not filled because the spreads were just that tiny bit higher. Absolutely hate that. Now, the next thing I want you to consider when choosing a broker is, of course, fees. How big are the commissions for a round trip? When I say a round trip, to open a trade and close a trade, how much is that going to cost you per contract? So some brokers work differently on commissions, but most will charge you one fee to open and close that trade per lot that you're trading. So across most pairs, it'll end up being the same per lot. But again, consider that. If you can get a broker that has good customer service, good spreads, good withdrawal times, and small fees, then that's a win-win. Now, the most important thing to consider when choosing a broker is regulation. Here in the UK, we have the Financial Conduct Authority. Please, 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 if you're a UK citizen, trade with a broker that has FCA approval. That's going to cover you in case, you know, they go bust or anything happens. You're covered by their regulation, right? So That is the most important one for me. Now, step 3 in the preparation phase is assess your resources. So we've had choose your battleground, choose your weaponry, we're now on to assess your resources. Now, resources are funds and time. So I've got here, what you need to think about here is how much time do you actually have during the trading week to trade. Maybe you work a full-time job, maybe you're in full-time education, right? If you're at university 3 days a week, you need to think about, okay, so I've only got 2 full days to dedicate to the charts. Is that going to be enough, right? Now, in the spare time you do have, are the markets you want to trade active? Perhaps you live in Australia and the active trading sessions are whilst you're sleeping. Is this something you can change? So I personally know people in Australia who sleep during the day and trade during the night. You know, you have to think about the sacrifices you want to make if you want to make this work. Now, the main part is money, right? The main part of the resources step is, of course, money. And in this part, you need to think about how much can you realistically throw at trading. And when I say throw at trading, that is absolutely deliberate, because when you begin trading, that is what it's going to feel like. It is going to feel like you're throwing money at it. Hopefully, with good risk management and a well thought out system, you know, that phase isn't going to go on for too long, but I'm sure there will be periods where you feel like that. So a little bit of tongue in cheek. Now, maybe you don't have a lot of capital available. Maybe this is some point where you think, do I want to trade a funded account? Do I want to trade a demo account and then get funded? You know, what do I actually want to do here? So some things to consider in this step 3. Will the time and or money you're investing impact on your current life or mental health? If the answer is yes, will this put more or less strain on your trading? Now, of course, the answer is it's going to put more strain on your trading. You need to think about, if I have 10 grand in the bank, do I want to put 8 of that in a trading account and then I'm constantly worrying about it, right? Is that going to help you in trading if you're constantly worrying about the money in your trading account? Probably not. So the exact same applies for time. If you think, I have 10 free hours in a day, you know, where I'm not at work, I'm not sleeping, you know, if you do have that, well, fair play to you, but just as an example, let's say you have 10 free hours, how much of that can you dedicate to trading? Let's say you have 10 hours that you're not, you know, sleeping or working, right? How much of that can you dedicate to trading without it having an impact on your mental health? AKA, if you're trading for 10 hours a day, is that going to psychologically affect you and make trading even harder? So that's something to consider there. Now, step 4 of the preparation phase is devise your plan of attack. So this is your strategy and your trading plan. Given that everyone is different, our strategy should differ. What works for me may not work for you and vice versa. So in building a trading strategy, you should consider the following. How long do you intend to be in a trade? 5 to 10 minutes, 1 to 4 hours, 2 to 3 weeks? Again, that's going to depend on how much time you have available and what your schedule looks like. Now, the answer to this is going to give you an idea of the time frame that you're going to trade on. For example, if you maybe want to do some position trading and trade for weeks at a time, you maybe want to be looking at a daily chart and a weekly chart. Now, another thing to consider when devising your strategy is what time frames will you analyze on and what time frames will you execute on. Now, these are intentionally different because one of the biggest mistakes I see beginner traders making is trading and analyzing on one time frame and not touching anything else. They don't have a higher time frame bias to confirm whether their opinion on the market is correct or actually works with the flow of the market. So for an example, the market could be in a huge daily uptrend and a huge 4-hourly uptrend, huge hourly uptrend, and they're sitting on a 5-minute looking at breaks of structure, analyzing for short and trying to stay in the trade for, a day or 2 days. So again, for example, will you look for targets and direction on a daily and then execute on maybe a 4-hour or execute maybe on an hourly? Again, something you need to consider. Another point to consider in building your strategy and trading plan is, will you use a technical based system alone? So will you trade purely technicals, Or will you trade purely fundamentals? Or maybe you'll trade both. You know, I know traders who trade a fundamentals-based system with technicals for entry. Or they trade technicals and they use fundamentals to frame a bias for the trade. So for example, they may say, you know, AUD USD, I have a daily bearish engulfing, I'm going to get an entry here, and there's some negative Australian dollar data due out on Wednesday, so I'm going to plan to be in that trade, and then after that data comes out, I'm going to use that, you know, that extra volume in the markets, we see a little move down, I'm then going to pull out. Just an example. Now, the last thing to consider here, are you going to trade a trend following system or a mean reversion system? Now, what does that mean, right? Are you going to see the market making higher highs and higher lows and try and get involved in that uptrend? Or are you going to see the market making higher highs and higher lows and say, I think that's going to stop here and I'm going to use maybe divergence or whatever to predict the top and catch a little bit of mean reversion back into the trend as the market maybe extends to the upside? Again, I'm not here to tell you which is right and which is wrong. I do a mixture of both, but it's something that you may want to consider. Okay, so we are now on execution phase. Execution phase has 2 steps. Step 1 is trade, right? What you need to consider here in your trading plan is, how will you enter trades, right? Will you use pending orders or execute at market? Now, you may want to use pending orders if you have a busy lifestyle and can't dedicate a lot of time to the charts. You may want to market execute if you're sitting in front of your charts all day long, okay? Now, so perhaps you don't have time for entry, so you use orders in areas you deem to be advantageous. Now, let's explore that a little bit. If you use orders, you know, at levels in the market, areas in the market, how will you determine if that area is advantageous or not? Will you look for confluences in that area? Will you say, I'm willing to put a pending order in here because we have a fib level, an EMA is coming in there, a trend line is crossing there, and also we have X pattern or Y pattern? If that is you, then maybe this is something you want to write into your trading plan. I will use orders if I have X number of confluences for the area I'm looking to trade from. What's next? Now, perhaps you also want to include there, if I don't have 3 confluences or 4 confluences, I will wait for a confirmation candle. I'd also like you to list in your trading plan, what is that confirmation candle? Bearish engulfings, spinning tops, you know, pin bars, shooting stars. If you know, it's all of them or one of them, make sure you write that down in your trading plan, and it's something that you can refer back to. When you're looking at the market and you see a great setup and you say, it just doesn't have enough confluence in that zone, you'll look back to your trading plan and say, okay, well, I'm going to wait for a bearish engulfing. So you have something to go by, okay? So now that you're in the trade, how will you manage it? Again, a little statement about management. Are you going to stock every hourly close, every 4 hourly close? Or are you actually going to wait for the session to end? So are you going to look back at the end of the, you know, the Asian session, at the end of the London session, at the end of the New York? Or perhaps you just wait for a daily close. You take a trade with, you know, a several hundred pip target, and every time the daily candle closes, you make a decision about what you're going to do. That's something to think about as well. So step 2 in the execution phase is reorg, review, repeat, okay? So reorg, now that the trade is closed, take a screenshot and take down some notes. Then reorganize your charts, clear off any notes or analysis that are on your charts that you no longer need, and get prepared for review. Onto the review phase. Now you want to assess the outcome of the trade. What could you have done better? Now, when we're looking at what you could have done better, was your stop wider than it needed to be? Was your target not as ambitious as it could have been? Perhaps, you know, you saw an area in the market you thought it was going to go to, but you weren't confident holding the trade that long, so you moved your target up. This may be something you want to note, right, when you're doing your review. Could the target have been bigger? Could the stop have been tighter? If the answer to both is yes, then that's going to exponentially increase your risk to reward. If you see this over, a handful of trades, you may start thinking about making your stops a little bit tighter, right? If you see this pattern repeating itself, but you're only going to know to do this because you've got a plan, okay? Now the final step, repeat the process, right? So you've done it all, start to finish, you've taken your notes, now it's time to do it again and implement what you've learned from your note taking, your review, etc., and make that next trade a better one. Now, you've got your trading plan. This video is kind of aimed at those who already have a good idea about what Forex is, but and what trading is. But what I am going to say to you is, if you are maybe hitting a little bit of a patch in your trading, a bit of a plateau, and you're not doing all these things, you're not journaling, gathering data, etc., and you're not following a plan, just give it a try, because you've got nothing to lose and it could exponentially increase your performance. So guys, I'm going to give you a couple of resources to check out as well that I think could be very beneficial to you. So the first is Mark Douglas's book, Trading in the Zone. If you haven't checked that out or read that, it's really, really worth it. He also has another book called The Disciplined Trader, again, a fantastic one. And he has a 4-part YouTube series called How to Think Like a Professional Trader. Another thing to help you with your mindset and, kind of making continuous progress moving forward is the 2-part series by Dante here on YouTube. I'll probably link this in the description. It's just called Stop Moaning and Start Improving. 2 parts to that, and he covers some fantastic points, really targeting being prepared and, having the correct mindset when you are actually coming into trading. The title says, stop moaning and start improving. And that really is what this video is about, right? Many people will be hitting a rut in their trading plateau. I've hit that many times. And a lot of the time it's just a matter of taking a step back, taking a breather, and getting organized, writing a plan down, and attacking the markets all over again. So guys, this has been a super casual one, just while I'm getting ready to head out to the gym. If you did enjoy it and you like this style of video, please be sure to drop it a like and consider subscribing if you haven't already. But anyway guys, take care and I'll catch you in the next one.